Hello and welcome to Crux Investor. We spoke earlier today to Vern Baker, CEO of Jaguar Mining, TSXV, company with assets in Brazil. And if you want to hear our thoughts on that conversation and the company itself, you can find that at cruxinvestor.com/club, where you can also find detailed company reports, commentary from market experts from around the world on a variety of commodities and the macro. There are training videos in there. Also, there are summaries of other interviews that we have done. And of course, there's a thriving community of investors sharing their thoughts and ideas with each other. And if you go there now and sign up for the waiting list, you can apply for the 7-day free trial. And of course, we'd love your feedback too. So do give us a like and leave your comments below. And if you want to see exactly what we talked about, you can find that in the description below. Hey, Vern, how you doing, sir?
I'm doing great today.
Well, thanks for joining us. And you're joining us from the hotbed that is Brazil. How is it down there?
Actually, it's been a bunch of good things for me. It's been a great place to live for the last year. Actually, it's been a pretty good place to weather out the coronavirus. We're based in Minas Gerais, one of the states of Brazil. It's had a fairly low impact. Our hospitals have literally never gone over 50% full since the beginning of the quarantine period. We really haven't seen a lot of issues. We have had a small number of our individuals, still actually well below 4% of our team that's even come up positive, most of which with just very, very minor symptoms. So we've been able, we felt pretty good how we weathered it to date and how our people have dealt with it. And we have a good, strong team. They've managed their way pretty well through things.
Oh, that's fantastic. If you read the press, you think it's a raging epidemic down there. But I've also heard from a buddy who's just come back from there. He's said that everyone's treating it very seriously. Everyone's wearing masks. It's being monitored and measured.
Oh, yes. I would say it's been treated very seriously. Almost every measure that could be taken had been taken. Certainly in our communities here in Belo Horizonte, which is an area with over 8 million people, basically in the greater area, really has never become a big issue. People follow procedures pretty well. Masks have been, for probably 6 months or more now, people have been wearing masks very consistently. And as I said, like our hospitals have not gone above 50% in total occupancy or in the intensive cares in the whole time that we've been in the kind of coronavirus issue.
Fantastic. Now, you mentioned that you've moved down there and you've been with the company about 14, 15 months now. How are you finding it personally? And why did you feel the need you needed to be in country to be able to manage this thing?
Well, we're really a Brazilian-based mining company, right? We're on the Toronto Stock Exchange. And, many of our shareholders are European, American, and Canadian. However, our operations and the people that make this company tick are right here in Brazil. And, we had a very tough time up until about the middle of last year. And the team needed leadership, and it's very hard to be a leader at a distance. And I felt it was important for the team here to have someone who was in the boat with them, making sure that we're going in the right direction and rowing hard.
No, I like that. I like that because quite often management teams try and manage things remotely from the other side of the world, and I'm not sure that always works. But okay, that's great. Why don't we kick off? Give me that 1-minute overview of what Jaguar Mining is for the people new to this story, and then I'll pick it up from there.
Jaguar is a gold mining company with exploration and operating assets in the Iron Quadrangle, Minas Gerais, Brazil. So that puts us in a district that's produced over 50 million ounces. Still has a known endowment in the order of probably 20 million ounces. And, we see great opportunities for us to sustain a production level of 100,000 and to grow that both through organic growth within our property, our mines, and within exploration growth. The well over 50,000 hectares we have of exploration tenements here in this gold district.
Fantastic. Okay, well, thanks for that. I want to kind of get into this. Like I alluded to there, you haven't been there that long, and you've also acknowledged the fact that this hasn't been a pretty story for the last, 3 years or so, because the share price is back up to the dizzy heights where it was in halfway through 2016. You've been brought in to do what? Solve some problems, I suspect.
Yeah, to build a sustainable mining company. That's what I came here to do. And we did. They had some tough sledding up about to middle of last year with a strong commitment from our shareholders. They came forward with $25 million and basically recapitalized us in July of 2019. With that, they needed someone who would provide the leadership to fulfill the plan. And you know that I got luckily for me, I got picked for that. So I came down to lead this team through executing a plan that would take us from, I believe we're about 73,000 ounces of production the last 2 years, and bring us up to 100,000 ounces is our target for next year. We should be this year a little bit. We should be over 90,000 this year, it looks like.
Okay, but I'm interested in the man. Okay, you've been brought in. You were lucky enough to be selected. You kind of modestly put it. But what did you walk into? What were the problems that you identified? You know, so coming into an operation like that, what are you looking for, and what do you do about it?
Okay, well, you know, our operations had some technical problems. One of our operations had some technical problems, actually about 3 years prior, and had really for several years failed to do the development to get themselves ahead of, ever catch up on those problems and get ahead of them. And so like any mining organization, right, whether you're stripping an open pit or while we are underground mines, you have to develop the reserves and resources and have an inventory of available stoping blocks to provide consistent feed to your processing plant. You know, so our target, my target was to come in and continue a plan of high levels of development that would provide the inventory of developed and available mineable blocks of ore so that our mines could consistently produce at predictable levels. You know, I mean, that kind of defines sustainability in our business, right? Do an adequate amount of drilling to have good, strong resources and reserves under you, do the development to have the material available to mine, and then do a good, competent job of mining. Because of the struggles they had for several years, several things had slipped. Our mining and development productivities weren't as high as they should be. So it was a good place for us to focus, was improving on our productivity and our outputs of our people and our equipment. And then as we've gotten more and more development in place, it's allowed us to have more places to go after our reserves and to consistently feed our mills. And with that, we've been able to see, and right now we've just completed 6 quarters in a row where we've stepped up our production a bit from the prior quarter. And we expect to, you know, of course we expect, and the coronavirus can always throw a wrench in the middle of things, but we would expect that we can probably make another step this quarter and really be at that 25,000 ounces per quarter or 100,000 ounce per year rate as we finish this year and as we go into next year. Of course, one of our key quality measures that we're very proud about is also safety. And the company has struggled a bit with safety last year, and we were able to turn that around in the second half of the year, and we've been able to continue a pretty good safety record for this year, relatively very good actually, and the team's really stepped up, and the quality of what we're doing, I would say, has increased on a steady basis along with the outputs of ounces.
You've also had a lot of help with the gold price. The Brazilian real has depreciated by about 30-odd%. And you've had the cash injection as well. So there's a few other things which have kind of helped you along your way. I mean, how much credit do you put by that, or is it about the turnaround itself?
You know, I think they go hand in hand very well. We would have had a fairly good year without the without the change in the AI, without the change in the price. Now, very significant increase in our cash flows came because the price is $1,900 instead of $1,400. And certainly with the change in the AI, that's reduced our costs in US dollar terms fairly significantly. So it's been a great benefit, those two things. You know, what we can do as miners, or we can set everything up correctly and we can do our jobs correctly. And if we do that, we can produce 100,000 ounces here with the two mines we currently have on a nice sustainable basis. And it looks like, 10 years is a good forward projection right now. If you look at, we have about 5 years of reserves and we have about twice as much of that in resources. And so we've been able to add to it each year. So we have a good solid base of resources and reserves to move forward. We think we'll be able to continue to add to that. We have a significant amount of infrastructure in place in the Iron Quadrangle that should allow us to grow significantly. Right now, we run two mining operations. One is about 1,200 tons a day and one's about 1,000 tons a day. They both feed mills that each can handle about 2,000 tons a day of feed. So in the two operating mills we have an opportunity to boost our tonnage production by 40 to 45% simply by augmenting our reserves and our resources and being able to feed those into mills that are already operating.
But these
so that can be a fairly inexpensive way to augment our production.
Well, that's what I wanted to get what the plan is here. You've come in and had to fix some problems, and there's some quick wins, right? So that's good news. And I think the real, Brazilian real, is helping you. The price of gold is helping you. But I want to see what the business plan is going to be and what that's going to do for you, because both mines are relatively deep stoping mines. You're hauling this stuff up a long way, 1,000 meters up, and then you got to truck it 30 kilometers to process. It's expensive. So how do you start augmenting that? How much more money do you need to be spending on development versus exploration? How do you build this thing?
We're a gold mining company. If we want to really make money, we got to have the diamond drill bit turning. We got to have it find additional reserves and resources. So, something that we as a company did not do a lot of prior to last year, simply, when the company was in very tough straits, you didn't have the money, right? You put every dollar you can into production and until you can pay your bills. But since really the middle of last year, it became obvious that we were going to be successful, that our plan, if we stuck to it, would allow us to become sustainable and to become cash positive. We started expanding our exploration presence in basically November last year. By the time we had the contracts in place and got people in here, we started drilling significantly. We're drilling about twice as many meters so far this year as we drilled last year in the same time frames. And we have recently, in the last quarter, we brought on 2 diamond drills on the surface, because we have roughly, I think, wholly within Jaguar, we have about 28 additional properties. Let's say 26 additional properties that are part of our portfolio of mining tenements to explore. 20 of those actually already have some kind of known gold occurrence on them. So we're really going after them. Several of them have had mines on them. In fact, that we operated some small mines on several of those properties. So we began investing fairly significantly last fall. It's been stepping up. By the middle of this year, we started our surface exploration. We got a couple drills turning right now. Our goal is to, with those drills, to develop additional resources to fill those 2 mills. We're drilling in our mines too, because a certain portion that we want to continue to expand your mine performance as well. We think that the 2 mines, with nothing else, probably have at least an additional 10% they can augment over the next year or 2 in performance. I would say that, our big wins come with some of the properties we're looking at on the surface, which can again augment the total production. As well, we have a third mill, which we're not operating at all, currently under care and maintenance. And we just signed an agreement with another company for a joint venture on about an additional, I believe, 27,000 hectares. A big chunk of which is located right next to that mill that's on care and maintenance, and which we think is a great place to be looking for a gold deposit. So, we think we have some great opportunities. We're going to be spending probably on the order of, next year, you're probably looking at an order of $8 to $10 million we'll spend on pure exploration effort, because we have the packages to work on. We've done the footwork over the last several years when we did not have money to drill. We did a lot of the good groundwork, got geologists in the field, mapping, sampling, pounding on rocks. And we think we're in a good spot to be putting some holes in and coming up with some new resources and reserves for our organization.
But those things take time to come through. I think it's good that the company's doing that again, right? It needed to be doing that again. And I understand why it couldn't for a while, right? But let's talk about some quick wins. You mentioned, an agreement with another company. You haven't named them. Which company are you referring to?
IAMGOLD
right.
has and still has some other properties here in the Iron Quadrangular, but it's a joint venture with IAMGOLD on to explore the properties, some of the properties they had held that are really pretty conveniently located for us.
Don't they also have 900,000 ounces at Pitangui?
They do have a deposit at Pitangui and
near Turmalina,
actually reasonably close to our Turmalina mine. Right now that's not been part of our agreement. It very well could be in the future, but for right now, we felt that for us the best route going forward would to be to get focused on the exploration aspects in some places that we think could benefit us and reasonably quickly. We already have a fairly significant. Our first exploration effort has been on the Turmalina property, and we have a additional resource there that we've put some drilling in. We think can bring online fairly quickly. And we're drilling another deposit, not a deposit yet, another prospect that has, we think, a real good chance of contributing to that mine there. So we kind of think right now we're going to have the feed to bring that mill up to where it should be pretty soon.
Pretty soon, okay. But so just again, the IAMGOLD, so they're helping you with some exploration. They have a reasonably shallow underground 900,000 ounce resource. Would it make sense for you guys to have a chat? They need a plant. You need feed.
I didn't say we're not chatting. We'll chat with them and stuff. Something like that ends up becoming, the issue becomes in valuation. And if we look at that deposit, right now, it's just not at a point where the two companies are close enough on evaluation to want to move forward with it. It's a nice little deposit. We think there's a good chance that sometime we might do something, but certainly we think there's as much or more value to be gained with the drill bit through some of the things that we're working on our property already.
Does it make it easier to have a conversation like that when your coffers are full, when you've got a bit more money? Yeah,
well, to some extent, yeah. If you take on, if we took on a project like that, or they said the project takes money to do it, right? And a year ago we couldn't even have talked to them because we couldn't. We were barely funding our own operations, then less funding a new operation. So we're at a point, we've got the rigging tight, got sails up. The winds are certainly blowing in the right direction, and we feel like if we can continue doing things correctly in our mines, do the development, mine correctly, stay safe, good quality environmental and mining practices, that we really can be a solid company. We can continue to add value for our investors, and that we have a tremendous opportunity to grow. We can easily more than double our current production profile without building a mill, because we have that milling capacity currently available. Of course, anytime you make those changes, there's going to be some investment you need to make in as you bring in different ores. But, just marginal cost relative to any time you have to build a mill. And we have a lot of good ground in a great gold district.
Yeah, I'm kind of interested in, though, come on. You're in there sorting problems out, and you've got to look to the future too. You've got $39 million or so in cash today. You are producing. So despite COVID, you're hitting your kind of 95,000 ounce guidance. And gold is doing what it's doing. So you're continuing to add to that position. It does give you options, but you also need to look at near-term solutions to feed those mills. You've got 3 mills, 2 working.
Yeah. Exactly. 2 working that could handle quite a bit of additional flow, and one that's on care and maintenance. Now, the Pitangui deposit, as we've talked about with IAMGOLD, would not fill them up in the near term, right? Wouldn't do it because there's a fairly significant development profile, especially on what would effectively be a greenfields project. We have a whole bunch of potential sites under mines that we've shut down, or within mines that we've already shut down. That's where we're really looking for near-term additional performance, is that many of these properties that we've already mined that, shut down with lower gold prices, shut down with poor performance, shut down for lack of capital, that we could potentially bring online. We can get the drill holes in them and see how quickly we can bring them online.
Okay. Now, you've also been looking at costs. Okay, you're reducing costs. I'm looking at the AISC, the CRC costs. They're all coming down, but they've been coming down because you haven't been spending too much money. But you're going to now start spending money with the drill bit again. So, where do you feel the AISC's going to end up for you once this program you've started happens?
Okay. Well, if you look at right now, our AISC's going to run plus or minus $1,000, right? This depending on whether it's a big capital quarter or a low capital quarter. You're going to have some variability when you're our size of a company. It's the most of what we're going to be spending in additional capital, right? And we have $40 million in the bank almost. We're really generating about as much cash as we think we can consume once we get our exploration and our project development teams up and really going. We're probably still producing more cash than we can consume. So we've already started paying the dividend. We really don't foresee a world where we couldn't continue doing that. And the real, for us, a key is continuing to do a really good job where we're at. Continuing to improve. Because the 2 mines, we can grow a bit just with the 2 mines. But as we can add in those incremental deposits outside of those 2 mines, that will drive costs down very significantly. For quite a while, we don't have to turn on a new mill. We just have to put more rock in front of it. That's all we really have to do. So our big capital isn't really there. We'll be able to come in, have total costs, be very good, continue to produce. Our target is to stay at the $1,000 or less ounce per ton production rate. We think long term is quite doable. The opportunities that we see, we think support us continuing to do that. And we're going to spend more money, but a lot of it's going to be in exploration and project development, which actually doesn't show up in your all-in sustaining cost, right? That's growth. That's a growth exploration and growth capital. So it's not sustaining as is currently defined. The sustaining capital will probably stay consistently around $1,000. You got AI changes and things like that can change it, or if inflation starts hitting us heavily on industrial products. But generally, that's about where I think our organization should be hitting it. Our big opportunity to really change that is as we bring additional resources into play, turn them into reserves, and then process them into gold in our plants.
Okay, so the market seems to have reacted quite well since, let's say, April, May time. You've seen a nice bump, let's say, back up to where you guys were in 2006, mid 2016. Is that because you've been talking the message of doing the exploration, doing the development, where people had seen that you were just trying to throw off enough cash just to keep the lights on? What have the institutions been saying to you as a result? Because it's great to have Uncle Eric in there. He's a big 48% shareholder. You've also got Sprott AM, Asset Management in there, and a few other nice names. Are you starting to gain that attention from the institutional side of things again?
Yeah, there is a bit. We're getting a lot more questions, more people calling us. People are interested in actually looking at blocks, and of course, lots of people want to know if we want to raise money now that we don't need it. And can we as to buy blocks to get in? But really, what's driven that price up so far is the fact that we do what we said we'd do for a year. Now, real trust and value for a company, I think, probably takes 2 years or 3 years of doing what we said we're going to do, right? And as we continue to do that, faith in the fact that our team and our properties can do what they said what we say they can do, as that faith comes stronger and stronger, I think we see some valuation. But our margins, went from zero in the barely over zero in the first quarter, which we had other limiting things, right? We still had some forward sales that we'd been forced into to borrow money in the past, and so well, we got through all that. We went from zero to $900 an ounce margins, right? Basically in April. And as people started to recognize that, and as we came out with a second quarter that again showed we could do what we said we would do, and now kind of the third quarter of this year, saying it again, that I think the faith that we can do it. I think, the real leverage on our company, because we're still a small company, right? 100,000 ounce producer. If you're Barrick and you drill into a nice deposit, it doesn't mean anything, because Barrick has to find, or Newmont, they have to find 10 million ounces a year to stay even. We drill into a nice deposit. It's a multiple on our organization still. And we're in a district where those nice deposits can be found and have been found in the past. And I'm confident will be found in the future. So we're working hard to be a company that can provide that exploration value, as well as the consistent, solid production value that can fund ongoing exploration, can fund development of new projects, can fund a fairly steady growth profile. We don't even know what that profile is yet, right? As you said, our world changed in April, and we're working hard we've been doing a lot of work just to get everything positioned to take advantage of the winds that are driving our boat now. So
I tell you how bad it was for you guys before you came along. Was the COVID impact made no difference to your share price. You're one of the very few that didn't dip at that point. That's how few people were paying attention. So, congratulations on the turnaround for a start. So let's talk about the corporate structure for a bit. You did a reverse split. Okay, there's consolidation that you guys did. Why did you feel the need to do that?
The board and our financial team, we discussed that a lot, because for me, it's I'm just a production guy, really. I love mining, and I love producing gold, and I love working with people. But, it's really not that much harder to multiply by 724 than it is by 72.4 in all reality. But our board and the financial people we talked to felt that in the long term that we'd be better off with the consolidations, bring the price of the stock up to a level that there's certain companies that don't, there's certain investors that don't really want to play in a penny market, right? At one point we were an 8-cent stock. Now we're 80-cent stock now, but that's still cents, right? Rather than a $7 or $8+ stock that we are. So the feeling was that would allow us over time to start appealing to more institutional investors and kind of broaden the base. And at the same time, we knew we were going to begin paying a dividend, and an 8-cent dividend sounds better than a 0.8-cent dividend anyway. We thought kind of that combination, showing the consistency, the ability to be a higher valued share and pay a dividend consistently and perform consistently, that we could begin broadening the investor base.
Okay. I mean, does it also tell us something that, like, you're perhaps looking at a New York listing? Because the US generalist funds, like companies with share price over $5, it just helps, and with a market cap somewhere around yours, it's something that attracts them. Is that anything that you guys have talked about internally?
We've talked about all kinds of stuff internally, so I'm not sure, where we go with that kind of stuff over time. We'll take it a step at a time. Right now we don't see it as a critical thing. Again, we see positioning ourselves to move forward as a mining company, to move forward with growth on the potential projects we can bring to play, and to add value for everyone, right? For our shareholders, for our team, and for our communities, is quite available to us. And what we try to do is that every step is positioning so that future steps make sense. So it makes sense for the future steps we're taking.
Eric Sprott put money twice into you guys in 2018-19. Again, I appreciate it maybe before your time, but what is his influence in this? Because he's effectively kept the company afloat. He is effectively he is the majority shareholder, but he's effectively owns this company, right? So what's his role? Do you talk to him on a weekly basis, monthly basis, at board meetings? How does that work?
I would say I probably talk to Eric about once a month. He's been very clear. He wants us to manage the organization and to take it forward. He's been extremely supportive. He was incredibly great with the coronavirus coming on. While we've done well through it, we did not know how it would go at the beginning. We made sure that he knew what we were doing. He even at the time said, "Boy, if we're going to need money to make it through it, that we could talk to him." Now, it was the exact opposite, right? It's been the wind came up and blew in the right direction for us, so it's been opposite. But he was there to support us. It's been fantastic, and literally without our shareholders coming in and refunding this company in July of 2019, we could not have done the things we're doing, right? So, it's often easy for people to think, well, we're here and we're making good decisions in doing this. Without shareholders supporting us, we wouldn't even have the opportunity to be here. And so we're strongly supportive of our shareholders too, because they helped us. They gave us a chance to be here and take advantage of the opportunity that we see in the gold industry, both this year and I think going forward is going to be very good for the industry.
I mean, given you've got a cost-cutting mentality, and you brought some people in, have people left?
Well, I don't know. I've cut costs in a lot of places. Our drive hasn't been to cut cost here. Our drive has been to drive more production out for the same cost, right? To not spend any more money, but keep pushing more ounces out the end. So that's really been our goal here. And, I haven't really brought in a team. We had a good team of Brazilians here. They knew what they're doing. We've had a couple changes, a couple managers come in, a couple have left, but there's not been a big change. In the whole company, there's really three native English speakers in the whole company, right? Our CFO, which is Hashim. Hashim's done a great job for us, and he's really our Toronto presence. Myself here in Bello, and we have a transplanted Australian who's basically Brazilian, has a Brazilian family, and lived here for a while. So other than that, our team is Brazilian. We have some great, strong vice presidents, some great, strong managers, young team. I've bulk of my career spent in Canada and the United States, and I've been in mines where the bulk of the guys are walking around with this gray stuff in here, and that's not the case down here. We got a bunch of young guys, a lot of energy, fantastic, well-trained workforce in Brazil, especially the technical and the engineers and geologists. They're as good as you'll find anywhere right here. Right here in Minas Gerais is a great spot for attracting talent and for bringing in good, strong people into our team. It's been a delight working here.
Fantastic. So, Vern, I'm going to start wrapping it up here. Okay. So, what are you nervous about for this year? I know you're going to say me gold is going to the moon, so that's fine. Let's assume gold's going to continue at least where it's at, if not better. Okay, we'll assume that. I won't ask you that. But what about the Brazilian real? I mean, it's really been hit. Do you think that's going to gain in strength? You're in Brazil, you're seeing what's going on. Do you think it'll come back? And if so, when?
I think that the Brazilian real has probably established a new base for itself, probably something above 5 reais to the US dollar. There could be some kind of major macroeconomic change that would drive a differential there. Could go either way. The Brazilian economy is pretty strongly dependent on exports. The U.S., to the rest of the world, to China. Lots of agriculture, lots of oil, lots of steel, lots of iron. It's. I think you're going to probably, for Brazil to stay strong, the real is probably going to have to stay reasonably close to where it is. But I tell you, I'm not a financial guy. I'm sure not a money trader. We'll deal with it, whatever it does do. I would say, just from my perspective, I don't think you're going to see 4 in front of that number for a while.
Okay.
Quite a long while.
So you guys have timed it right. You've built up a cash reserve, so that's all good news. So let's stick with something that you are more comfortable with, which is what are you excited about? I'm gonna guess it's what the drill bit delivers you with exploration and development.
It's gold, baby. Drill, turn the bits, and when you get good numbers coming out the end of a drill core, life becomes sweet in gold mining, right? And if you look at the really large leveraged value that's coming gold mining companies, it doesn't come from being a really solid producer and increasing by 5% a year. It comes from drilling into a 10 or 20 gram ore body that can impact your cost significantly and that can multiply your production. That's what we're looking for, right? And we haven't, that's what we're looking for. But so is every gold mining company in the world.
They are. Well, Vern, thank you very much for running through that story for us. First time we've met, first time we've spoken. We look forward to speaking to you again.
You bet. Love to chat with you again, Matthew. How can I not like talking about how we've been doing here and what, like I said, we've got a great team. It's been a lot of fun and really looking forward to what we can do over the next year or two.